Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, are there any changes with Dow Theory?
None whatsoever. The Dow Theory, the previously triggered bullish trend change, remains intact. So there's, it's status quo there. No changes.
What's it telling us?
Well, it's telling us that the advance is, it's according to Dow Theory, the advance has been confirmed, and it's still in an uptrend. So there has been no change according to Dow Theory with this advance out of the March low.
So is it onward and upward forever?
Not forever. There will be a change. We have to see, talk about the structure, and I see issues. The cycle, there's been no changes with the cycles either, but the cycle coming out of the, out of the March low, it is very, very stretched. And, as with any stretched cycle, I think that the setup is likely to occur, without much warning, and bada bing, bada boom, you get a setup and a turn. So while there's no change with Dow Theory or even with the cycles, I think it's a fragile situation where we could see the setup happen quickly, and that's why the structure is so important.
Are we heading for another major correction like we saw last March?
I think we are going to, when we get the setup, we will move into a window for a correction. The question then becomes is how well can the market tolerate that setup? You see what I'm saying? The structure is like going to an intersection. It's like it allows, or it's a foundational turn point. Then you have to have that. And once we have that, then the question is, okay, well, how well does the market tolerate it? What kind of a decline do we get? What is the structure that's associated with that setup? That'll tell us a lot, because depending on the degree of the cycles and the exact, I hate to keep using the word, but the exact structure that's in place, for each various level or degree of the cycle, that should give us some indication. But then ultimately it comes down to how well can the market tolerate it, and how well can they control it? What's the response by the Fed going to be, and how well does the marketplace respond to that response? At some point, this stuff's not going to work anymore. And will that be it? I don't know. But, we are moving into, I think, one of those junctures a little later this year.
Well, you have an administration that seems to have no problem throwing trillions around. Could $1 trillion or $2 trillion correct the market, or is it just too big and it's going to explode anyway?
Well, it's been correcting the market. I mean, that's why we have seen we're up to $6.4 trillion, I think, since in the last 12 months with this so-called stimulus, and now they're trying to push another $2 trillion with this infrastructure thing. I mean, that's what this is all about. It's an effort to keep expanding the debt, to keep the bubble going, to keep the Ponzi scheme going. And this is, like we've talked before, this is going to work until it doesn't work. Or I say it another way, like a friend of mine, he says, it doesn't matter until it matters, and when it matters, it's going to matter a lot. And so when we get a setup where the efforts to save it no longer work, then, as they say, they're out of bullets, and nature's going to have its way.
Well, Tim, I like to throw in airplane analogies into everything, and I'm thinking this is an aircraft that's climbing, and it looks like it might stall. So they give the engines a little more power or a little more fuel. But at some point, you're going to run out of atmosphere to support the wings. So unless you attach a rocket to it somehow, it's going to stall and fall until, it gets to thicker air at some point.
That's a good analogy. And, you bring up another one. If we can digress for a minute, I had to go over to Pensacola earlier in the week, and right as I was rolling into town, it's just a little ways away from me. It's like a 20, 30-minute drive. But right as I was coming into town, the Blue Angels come streaking across. There's 4 of them. They come streaking across the skyline, and they turn, and they go straight up. And now that you mention it, that looks like our Dow Jones chart. It looks like the chart coming out of the March low. It turned, and it goes straight up. Well, that's cool, but like you said, how long is it sustainable? And again, the answer is until we get structure and they can't fix it and run out of fuel.
We'll have more with Tim Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, are there any cyclical changes we should be having a close eye on at this time?
Well, I see, there's some, yes, there is, the cycle, like I said, coming out of the March low is very stretched. The March 2020 low is very stretched. We're moving into some shorter term lows, and then there's some intermediate degree cycles that are due for a top. And so, you have, it's kind of like they explain in Dow Theory, William Peter Hamilton wrote, it's like you have the little eddy currents, and then you have the waves, and then you have the tides. You have movements of various degrees, and they all, are moving in their own direction, sometimes in the same direction, sometimes in opposing directions. But anyway, we're in a window where we should see, an intermediate and a longer term cycle top. And then, how does that set up? What does it tell us with the setup itself? And then how does the market, I'm back to that, how does the market tolerate it? And then what's the response, and can they save it again? So, but yes, we are moving into some cyclical junctures here as we move into, late spring and early summer where, yes, we should be in a mode where we see some corrections start to take hold.
Housing prices in both Canada and the U.S. are skyrocketing right now. Lumber prices are going up. Apparently, the cost of building the average American home is up almost $25,000 just because of the cost of lumber. Is this a trend that's going to continue?
I don't think so. I stick to my guns that everything is pushing into extreme tops. This kind of thing is absolutely not sustainable. And I have said that I think all asset classes are going to peak together, and I stick to that. In the meantime, hey, it is what it is. And, I looked at lumber prices just before we talked, as a matter of fact, and if I remember the chart right, unless I saw it wrong, they were up again yesterday at a new high. So, again, it's an abnormality. It's an extreme abnormality, but until again, the cycles turn, we get structure, it is what it is. And it's going to be just like the peak oil thing was, back when oil was at such the extreme back in 2008. And then bada bing, bada boom, it fell in place and it was over. And that's what we face.
By the way, Tim, this year I predict there will be no major refinery fire or explosion because we've already had a crisis in the petroleum industry with the Texas deep freeze. Because you'll notice every spring they say when they're switching from making winter gasoline to summer gasoline that somehow that always leads to a fire or two and increased prices when normally we wouldn't see a boost in gasoline prices yet until driving season. I'm just saying that now, not that I have a crystal ball that works all the time, but look over the last 20 years and see how often there's a major fire or explosion every spring at some big refinery in North America.
Yes, we've talked about that. That's a good observation. I think you're probably going to be proven right on that one, too.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. So, Tim, would you say that you're a deflationist or an inflationist right now?
Well, I'm staying in the deflationary camp, and I know that is contrary to probably 99% of the people out there. But no, I'm definitely in the deflationary camp, and the reason is because of the data. And if you look at, I think people are misreading what they're seeing here. Like I said, there is no question, and I want people to hear what I'm saying. There's no question as you said, what's happening to lumber prices. There's no question that oil is well off of its lows. There's no question that the CRB has been up. I'm not disputing that. And there's no question that tends to have some, quote, inflationary forces, I guess is the right word to say. But what I'm saying is, it's to use their word, it's transitory, as they say. And the reason I say I think people are misreading this because if we look at interest rates, and I have an interest rate model of this that I've started covering, and I'm going to cover it in the letter again and explain it in great detail this next month. But anyway, interest rates I think are telling us a story. And the advance that we've seen in commodities, like I said, I think they are a cyclical advance within the overall longer-term setup that's taking place here. And what we've seen is, obviously pressure on the on the short end, and the long bond has been moving up, has been moving down into a low, and the yield has been moving up. But that's about to change. The long bond is now nearing a low. And as it turns up out of that low, I think that obviously as price goes up, the yield's going to go down. So that's going to put the long bond back in sync with the short end. And so I see the yield curve beginning to flatten here. And if this was truly inflationary, as I read it and looking at some of that material that I just sent you, when the long bond or the long-term rate was moving up, I should say, that was the opportunity for the short end to move up too, which would be a more of a convincing signal of this being inflationary. And that's not what happened. And now that opportunity is being lost because the long bond is turning. And so, like I said, I think that the long end is about to get back in sync with the short end. It's going to keep pressure on rates, and then I think that's going to ultimately pressure the advance that we're seeing in commodities. So, no, I'm definitely in the deflationary camp, and that's why.
What would it take to change your mind about deflation?
Well, I would have to have seen that picture, looking at it from the past, up to this point, is I'd had to have seen that picture differently than as I just described. I'd had to see the short-term rates behaving differently, and in sync with the longer-term end. But then from here, I don't know what it would take because, it's like that opportunity was lost. Like I said, now the long end is turning, so it's like the opportunity is lost, but that aside, the answer would be I'd have to see the picture that I just described with interest rates change. And until that happens, I don't know. and there's just, I don't have any way out of that because I know what the model tells me. And you've seen it. I've sent that to you. Like I said, I have to stay in that camp because of the data.
Mm-hmm. If you're right about deflation, what do you see happening?
Well, once we get the setup, like I said, it all comes down to structure and using a corny analogy, but like I said, the structure is like a opportunity. It's like, the market's moving to that intersection and it gives it the opportunity to turn. Doesn't mean that it will, but it means that it can. And so when we get the structure, that, falls in place with the cycles, that opportunity is there. And then, like I said, we get the opportunity for, is it a shorter term correction? Is it an intermediate term correction? What degree cycles have set up at that juncture to turn? And then, like I said, the longer term cycle coming out of the March low, it's very stretched. So if we start to see evidence when we do see a turn that cycle has also turned, then, it begins to, the evidence begins to grow that it's a longer term, more sustainable turn or more meaningful turn, I should say. And then, can that get legs and can they come out and jawbone it and stop it? So there's a couple of ends to work to the middle, but what it boils down to is when we get structure and when the efforts to stop it fail. And when that happens, I think that I'll stick to my guns. I think that's when the deflationary forces take hold. And just like we saw in 2008, just like we saw in 2000, just like we saw in 2020, it all comes down together. I'm sorry, say again?
What do you see happening with gold?
I think it all goes down together. Pretty much all asset classes, I think, go down together because that's what we've been seeing. That's what the model is telling us. Nothing has changed. These are counter trend advances, and in the bigger scheme of things, and of course, equities have been pushed because of the stimulus and the efforts to hold it. Obviously, equities have been pushed to at a higher high. I mean, that's not counter trend, but that's just a continuation of the bubble. But everything else has been pushed to these counter trend within these counter trend advances, and it's all pushing into a top. And like I said, when the structure falls in place, bada bing, bada boom, and it'll all come down together.
What do you see happening with interest rates?
Lower. I think, like I said, I think the long end, the short end has been zero bound, as they say, and there's been pressure on the short end. The long end is now turning. The long end is now, it has popped. We've seen the long end is risen. But what I was saying, it's now I think it is at a juncture where it's going to turn, and the long end is going to get back in sync with the short end, and so we're going to see increased pressure on the long side, which I think overall will pressure interest rates as a whole, which overall is why I'm saying this is not truly inflationary. It's not long-lasting inflationary. It is within the context of a broader, much I don't know how to say it, much broader setup. Is
the U.S. dollar going to be affected by this?
The U.S. dollar, I think, has put in a major bottom. I don't know if it's, like I said, there's cycles within cycles. There's an annual degree bottom that is in place. A cycle is of approximately a year in duration. I think that cycle is firmly in place. We're in the early side of the window for some longer-term lows in the dollar. I can't confirm at this point if that longer-term low has been seen, but my assumption is, until it proves otherwise, is that it probably has. And so, right as everybody was being so bearish on the dollar, if you will recall back in November and December, it was popping up on stock charts. When you go to the little free stock charting service, it was popping up about the crashing dollar, and just it was constant. I saw the little ads in there, and it was right as the dollar was making that cyclical low. And the dollar, I'm not looking at a chart, but I think the dollar is at 4 or 5 months highs now, and so. And it was depressed because it had moved down into those lows. But my point is that I think that a major low in the dollar has been seen, and I'm not in that camp of a crashing dollar here, not at all.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.